welcome. I'm your host, Henri Arslanian, and welcome to this other episode of the Future of Money podcast. My goal with this podcast, as you know, is very, very simple. It's to go deep in some of the biggest ideas, trends, and developments we are seeing in the field of crypto, and hopefully empower you with this information and then let you make your own decision on what their impact could be on the future of money and the future of finance. And to do this, I invite each week one of the leading figures of the global crypto community to have this one-on-one conversation amongst crypto aficionados and discuss some of these topics. Today, I'm very, very excited to have with us the CEO of Bittrex Global, Oliver Linch, who's going to come and talk to us and not only discuss some of the latest events, but also the impact of regulations on the future of crypto exchanges. By the way, many of you know Oliver as the CEO of Bittrex Global. One thing you may not know is obviously he's a lawyer by background. And to my knowledge, he's the only lawyer who's also the CEO of a large crypto exchange. Oliver, great to have you with us today.
Real pleasure. Thank you for the invitation.
Before we also move on, I want to make one disclosure. Bittrex Global used to be also a sponsor of some of my educational content, and really excited to have them on board today. Oliver, there's so many things I want to discuss with you today. Really, there's especially after some of the recent events that we've had, the role of regulations and the importance of regulators has come obviously on the forefront. Maybe to kick things off, and before we actually go into the detail about some of these events, would you mind sharing a bit more about you, about your background, so at least the audience can get to know you, and then we'll dive into some of the topical discussion topics that we have for today.
Absolutely. So as you referenced in your introduction, I'm a lawyer by profession. So I spent over a decade at a global law firm as a financial services regulatory lawyer, working predominantly in Europe, UK, which is where I'm from, but also in the US and in the Middle East, doing traditional finance regulatory work, working a lot with exchanges and banks and institutions, across the financial spectrum. And then I guess as fintech began to take off and my career moved in that direction, especially in the Middle East, I was doing a lot of fintech work. And so you kind of take traditional exchanges and fintech and push them together and you get the crazy world that we call crypto. So I joined Bittrex Global just over a year ago, actually, as general counsel. And then earlier this year, my predecessor as CEO stepped down and I took the helm. And I am, as you say, the only one I'm aware of being a global exchange that's headed by a boring lawyer.
Well, one topic I want to talk today is actually the boring, maybe the new sexy. So we'll talk about that in detail. To kick things off, Oliver, obviously, as we're recording this, Sam Bankman-Fried has been arrested. And obviously, FTX has been placed under Chapter 11 restructuring and insolvency under jurisdictions. As a CEO of a crypto exchange, what is your reaction when you saw FTX unravel? And what was your reaction? Like, what's your initial feeling and analysis of what happened there?
Well, I think my initial reaction was the same as everyone else's, which is a combination of shock, horror, just general sense of appalling scale of all of this. On a human level, we all know people that have been affected by it. We all know people that have lost their money, their jobs, their livelihood through absolutely no fault of their own. And your heart can't help but go out to those people. And then with your business hat on, you start to think, well, what does this mean for our industry? What does this mean for crypto as a whole? There are narratives that say, well, this is kind of bizarrely nothing to do with crypto, right? This could have been anything. It just so happens that these issues happened for someone involved in crypto. But then you think, but Sam Bankman-Fried, to so many people around the world, was crypto. He was the face of it. Such rapid developments, as you say, Bankman-Fried has just been arrested at the time we're recording this. I think a lot of people are surprised at how quickly that's happened. There was congressional testimony yesterday. Things are moving incredibly quickly, and those difficult questions are being asked. And I think that's really good. But what's resonating for me and what's really obvious for me is immediately people have centered on this question of trust. Whom can we trust? How do we know we can trust them? And what role does regulation have to play in that? And from Bittrex Global's perspective, we've been talking about this. We've been banging on about the importance of regulation for years now, right? That was one of the three foundational pillars of our exchange, was security, innovation, and regulation. And we were talking about it back in 2013, long before it became, I'll use your word, sexy. But it's resonating even more now because people are like, how were they able to get away with this? Surely someone was watching them. And the answer seems to have been, and there are still lots of questions, but maybe no one was, or maybe no one was robustly enough. And so the importance of not just good words on a page, like good regulation, although that is important, but good regulators having the expertise and the initiative and the authority to actually enforce those rules is incredibly important.
I think let's touch about two things you mentioned. Let's talk about the regulatory angle, right? Actually, ironically, I was the last person with whom Sam had an interview before the company went bankrupt. And that interview is available on my YouTube channel and various podcast channels. But I remember Sam mentioning that FTX is regulated by over 80 regulators. So in this case, FTX was regulated or registered with a multitude of regulators around the world. Do you think the problem is really regulations, or as you mentioned, better regulatory supervision, or frankly, we should use new technology, new tools to bring that trust and make sure that customers can trust their counterparties when it comes to digital assets?
Well, I think the really telling thing there is he would say, oh, we're regulated by over 80, like it's some kind of trophy where if you collect enough of them, you're doing it properly. And that's just not how regulation works. Right? Bittrex Global is regulated by the FMA in Liechtenstein and by the BMA in Bermuda. And those jurisdictions had two main things going for them. They had the political will to get good regulation in place really early on. And they had strong regulators with a history and the expertise to regulate in the traditional finance sector, right? In Liechtenstein, that's private wealth and banking. In Bermuda, that's insurance. So what you have is a bunch of, frankly, very smart people interested in crypto doing it properly. So it's very much a quality, not a quantity thing. These aren't trophies to put in the cabinet. These are and need to be everyday, difficult conversations to be had with someone that is challenging you. And like, it's a real pain, right? It's really, really annoying being regulated and not being able to do exactly what you want, but it should be a pain. It should be difficult. And, if I've got 80 or 100 or 1,000 different meaningless regulators or meaningless trophies in my cabinet, that doesn't make anyone safer.
But also there's a legal element as well. I mean, obviously, when many clients are trading with crypto exchanges and they're depositing their assets with crypto exchanges, in many cases, they're using the crypto exchange as a custodian, or at a minimum, from a contractual perspective, they expect that their assets will be held as client assets and will not be used for other purposes, with the exception if the client is consenting for those assets to be lent out or for yield products and so on and so forth. What do you think could be done to ensure that this legal agreement that is being entered could be respected? Because in the case of FTX, many clients who had assets at FTX, in their terms of service, they mentioned that these assets could not be used for other purposes.
Yeah, and look, I think the bigger issue here is the lack of clarity. When you engage in traditional finance with banks or with investment firms, you know what you're getting and you're not kind of left to fend for yourself. That's lacking in the case of crypto. And there are lots of different models, and there are lots of legitimate models, right? If you want to have an earn product, you should be able to have an earn product. If you want genuine custody, you should be able to get genuine custody. But the important thing is that people should know what they're getting and why they're getting it and how they're getting it. And that can be priced in, that can be, the difference between one exchange and another. The issue is not what you're doing, but how you're communicating what you're doing. Do your customers know the risk that they're taking? And are they signing up to that explicitly? So burying stuff away, and indeed in the case, it looks like of FTX, of simply not conforming to those rules. It's all very well having nice words on a page, but if you just don't do it, then unfortunately you're kind of screwed either way. Again, it comes down to that transparency. Now, that's really boring and uncontroversial in the case of a bank. It needs to be just as boring and just as uncontroversial in the case of crypto.
That's very interesting. Oliver, I want to ask you about proof of reserves. Obviously, we've seen in the last couple of weeks a lot of movement towards from the crypto community on having counterparties show their proof of reserves. There's been many terms that have been thrown around, from audit and SOX and proof of reserve. But let's say the general concept of a proof of reserves of an exchange making their wallet accessible, at least visible, for people to be able to see how much assets are there. What's your view as a crypto exchange CEO on this movement that we are seeing? Do you think this is really transparency? It's a positive step, or you think it's smoke and mirrors because we're not able to see the liabilities? This is actually meaningless.
Look, the principle is a good one. Transparency and being straightforward with people are values that I think we should all hold. But it seems to me very strange to think that you can overthrow, you can usurp decades of thinking and analysis on audit standards, on accounting practices. There's an entire industry dedicated to doing things properly. To come in and say, well, okay, we're going to throw that out the window and do our own thing with no commonly held standards, no, a real lack of rigor. We as a regulated firm, we get audited every single year, and it's incredibly difficult and annoying and painful and costs a lot of time, effort, and frankly, money. But we do that because that's how people can have confidence in our platform. Well, to come in and say, okay, well, here's a snapshot. Here's what I had at like 352 last Wednesday. By the way, at 353, I could have entirely changed the position. I'm going to show you one half of the balance sheet. So here's a big number, and I kind of hope you don't ask any follow-up questions. And there's no real way to compare like for like, because everyone's kind of figuring out or doing whatever the hell they want, putting out this proof of reserves thing. I'm sitting here being like, well, hang on, why can we get away with this? Like, why is the industry saying this is a mark that we want to have? But people are, and we could do it at Bittrex Global, and we're having discussions about whatever. Like, we just tick that box and move on with our lives. But it's kind of an embarrassing conversation to have when you're in a room talking about how we become a grown-up asset class, how we play along with the financial industry as a whole and become just another a way of people putting their money into different kinds of assets. And yet we're creating our own back of an envelope standard for what transparency looks like. Something there just doesn't sit right with me. So look, Bittrex Global may do it, tick the box and move on. But the more sophisticated conversation is, how do we do it properly? How do we get crypto to a place where across the board, being audited like Bittrex Global is just the industry standard? You wouldn't put your money in an unregulated bank. Why would you put your money on an unregulated crypto exchange just because they tell you that they've got billions and squillions and whatever it is dollars in the bank?
Yeah, absolutely. When I think about, for example, Bittrex Global, your platform, right? Obviously, compared to other platforms out there, I would say the type of offerings that were made were quite basic, right? Obviously, there was a lot of tokens you can trade, but let's say there was very limited, let's say, yield products. There was, it was a product that actually somewhere you go buy a crypto asset, and then yes, there's a lot of tokens, but the offerings were quite limited. Do you think when it comes to crypto exchanges and crypto platforms, being boring or being simple is the new sexy?
I think a lot of people seem to have got over their skis on crypto and are trying to jump on bandwagons and create shiny new features for the purposes of grabbing headlines. And that has distracted a lot of people from their core business. And as we see more and more of the interaction between FTX and Alameda unraveling and people saying what was going on there, I think a lot of people are like, well, hang on, is an exchange just a place where you go and buy and sell assets? And I'm sitting here as the CEO of an exchange thinking, yeah, that sounds like my business model. Come buy and sell assets, and you should be able to do that in a secure way, in a regulated way. But that doesn't mean there's no innovation. There's lots of innovation. We're just driven by what our customers actually want. So we don't go for the headline grabbing shiny thing. We'll engage with our customers. We're talking to them every single day, getting them to tell us what they want from the platform. And this is so important, in particular on the institutional side, because what we have is, and the story of the bear market in general, like even before the FTX thing, is institutions want to engage in crypto. Every big bank, whether they accept it publicly or not, has a substantive crypto desk. Every investment firm, every fund manager knows that they have to be offering crypto. So they've got decades worth of trading strategies, analysis that they want to apply to crypto. And what they're saying to us is, allow us to do that, create the mechanisms for us to do that, for us to model risk in crypto in the same way as we've been modeling it in shares or bonds or whatever it is that they come from. Those are the things that we're interested in. That's where we think the innovation is, to say to people, okay, here's crypto, engage with crypto. That doesn't mean doing funky things on the side and impenetrable kind of corporate structures that no one quite knows who's doing what and where. So yeah, boring maybe, but that doesn't mean not innovative. That means being customer driven, and that's absolutely what we are.
Yeah, so very well said. Boring doesn't mean you don't have to be innovative. Very very well said. I had the privilege or bad luck to actually, when I was a lawyer in my younger days, to actually be involved in seeing everything was happening with Lehman Brothers. Actually, at the time, I was working as a lawyer representing hedge funds against Lehman Brothers, trying to get their assets back. And then obviously, I was in prime brokerage covering the hedge fund industry for many years. And what I saw after 2008 was a very clear shift where prime brokers and investment banks starting offering bankruptcy remote vehicles, making very clear what would happen in the event of insolvency or bankruptcy, and also giving customers options when it comes to how they were custodying their assets and segregating their assets. Obviously, what we saw with FTX was clearly client assets were not segregated, and they were part of the overall pot, not only FTX, but also of Alameda. Do you think we're going to see in the next couple of months crypto exchanges come forward with segregation models, new custody models that are going to really try to give extra transparency and comfort to their clients that their assets are really segregated and not at risk in case of any unforeseen event?
I think we're going to have to, because I think if exchanges don't do it themselves, the regulators are going to do it for them. There were lots of lessons that were learned after the 2008 crisis. And even in traditional finance, those are still being discussed and still being modeled out and refined all the time. But it's pretty uncontroversial now that you have to have a client asset regime. You have to have a client protection of client monies. Like exactly how you do that, sure, that's being refined. But the lessons that were learned coming out of 2008 were that the risk modeling profiles and the mechanisms for protecting client monies weren't good enough. So that was 15 years ago. How are we still having this discussion just because someone puts the word crypto at the front of it? Like it's still client money, it's still assets. And I really think if exchanges don't do it themselves, the regulators sure as hell are gonna.
Absolutely. I think it's a very well said. And I think this is one area where I hope the crypto community will come together and actually propose a lot of these best practices. And to be fair, when we had the ICO boom in 2017, a lot of actually industry associations came together and proposed these best practices. I remember at the time I was the chairman of the FinTech Association of Hong Kong. We put out a whole paper on how some of the best practices that includes by the regulatory compliance, governance, transparency that the ecosystem can do. Because if we don't do it, like you said, regulators will do it themselves. Talking about regulators, there's obviously a lot of talks about increased regulations. And I want to touch upon a couple of them, but including MiCA in Europe. What is your perspective on MiCA in Europe? And do you believe this is actually positive for the industry, or it may stifle innovation, particularly in Europe, and we may see some of these players move elsewhere where regulators and regulations are more open to crypto and more specialized and understanding of the realities of digital assets?
So Bittrex Global is one of the very few exchanges that thinks that MiCA is overall a good thing. We think that the transparency, the clarity that it brings would actually help innovation. Like this dichotomy between being regulated on the one hand and being innovative on the other, that's false, right? It's just not true. What regulation provides is a framework within which you can innovate safely, and that's what people want. So MiCA actually borrows, in some cases explicitly, from the Liechtenstein Blockchain Act, the CBCG, which is what we're regulated in and have been for years in Liechtenstein. So people are looking for what it looks like to offer an innovative and safe exchange within the context of MiCA. They really need only look as far as Bittrex Global, and we've been doing it. Like we've been living it day to day for 3-4 years now. So I think the drive to less regulated jurisdictions will only happen from those participants that don't want the sector to grow up. For those of us that really do want crypto to become safe and regulated in a meaningful way, but also grown up, they're going to be happy with MiCA. And yeah, it's going to be a real pain for those that aren't already doing it, but they're going to have to step up their game. They're going to have to man up their compliance functions. They're going to have to increase their policies and procedures, not just on paper, but in practice too. It's going to be a lot of work, but that's a path to doing it properly. We can have discussions about whether this thing or that thing should be inside or outside the perimeter, but Now we have clarity. Now we know what we're working towards. People that think that they want the industry to do things the right way, the proper way, can actually structure their businesses along those lines. And then consumers, and ultimately regulation is all about protecting people, right? And those people know, okay, this is a MiCA regulated exchange. I know what I'm getting here. So I don't think it's going to drive, at least not good actors outside of Europe. I think it might, if anything, bring people that want to do crypto the right way into Europe. And that's why I think I'm sitting here in London. The UK government has got to be watching this very carefully, because if people are looking at where they're going to be setting up, looking at how they're going to get involved in crypto, and they say, well, the EU has, okay, a bit slowly, but has got there, and it will be implemented by 2024, early 2025. Why would you not go there? Why would you go to the UK instead? So the UK really needs to get its skates on a bit.
Well, talking about getting the skates on, I remember actually I saw you recently in Dubai. We're having lunch there, and I want to ask you more about what you think about regulators on crypto. Of course, as one thing we should expect after the fallout of FTX is increased regulations on the broader topic of crypto. When we are seeing now, obviously, regulators be definitely more knowledgeable about crypto. I know in your case, you regulated in Liechtenstein, in Bermuda, and now we are seeing some regulators become more specialized in the case of Dubai, for example. What is your advice to regulators? Do you think they should really start hiring people specialized on crypto? You think they should do like a model like Dubai where they set up a regulator specialized for crypto? Or do you think this should fit within their existing, let's say, verticals of licensing, supervision, and other, let's say, departments that they have from that perspective?
Well, what we've seen is that the most successful regulatory regimes and the most successful regulators are the ones that engage with crypto as crypto. So this kind of unedifying discussion about crypto that we hear in the US is like, is it a security? Is it a commodity? And the answer is like, no, it's its own thing. It's crypto, and trying to fit a square peg into a round hole is never going to work. And everyone just ends up getting frustrated and no one knows what to do. As to whether you need a separate regulator or you can do it within one regulator, there are lots of models. The important thing is that embracing crypto as crypto and taking a crypto first approach is the most successful way that we've seen to do it. And there are models for doing it, right? You mentioned Liechtenstein and Bermuda, where we're regulated. We've now got MiCA. Dubai are doing great things with Varo, and we look forward to seeing exactly what that looks like. So there are lots of models for it that are out there. You don't need to, if you are sitting as a policymaker in a jurisdiction who wants to get involved in crypto, you're not by yourself, right? There are lots of ways of skinning this particular cat. But I think the important thing is, as you mentioned, is education, because the principles might be the same as traditional finance, but the way it works is different. And the path that we've been on with our regulators is showing them how we can achieve what they need us to achieve, but in a slightly different way from if we were doing bonds or securities. Right? It's different. The technology has to be embraced. The whole point of crypto is that it's new. It's brand new technology. This is my one concern about MiCA, is that if you're sitting there in an EU member state that has up until now explicitly said they don't want to get involved in crypto, and then all of a sudden they're going to legally be obliged to accept applications to be regulated as a crypto exchange or as a token issuer or whatever it is, how are they going to do it? They don't have the staff, they don't have the expertise, they don't have the knowledge. Okay, it's all very well the EU, the European Commission saying like, okay, do this now, but they physically can't. So that's going to be a real challenge. And that's the same challenge for any jurisdiction around the world. Okay, you want to do crypto, but you don't understand the technology, you don't understand the platforms, you don't understand the mechanisms. Well, that's not going to work. The advantage that the FMA and the BMA have is that they're smart people who realize that really early on. And there have been hiccups along the way, and there have been ups and downs and learning sessions on both sides. But that has to be done if you're going to regulate it. You can't regulate something you don't understand, right? Because that's just banging your head against a brick wall.
Yeah, education is absolutely key, I think, Oliver, from that perspective. Oliver, one last question before we move on to our 5-round count. I cannot believe we're already out of time. This was such a lovely conversation. Obviously, there's been a lot of focus recently on certain crypto assets and whether they will fall within the definition of a security or not. And I think Bittrex Global, compared to other exchanges, you have a whole suite of different tokens on the platform. What do you expect to see in this area? There's obviously now a lot of scrutiny on XRP and some regulatory activity there. Do you think we will have more clarity on whether certain tokens are being classified as a security? Do you think we'll have more clarity on what tester is being used to determine if it's a security or not? Or do you think this is something that exchanges will continue to make a decision on their own on how they classify and view certain digital assets and make their own decision and hope for the best subsequently?
I think we need that clarity, and Liechtenstein provided that clarity really early on. So every single token that is listed on the Bittrex Global platform comes with a legal opinion that says that under the EU regulation, under MiFID, this does not constitute a security. It does not constitute e-money for the purpose of the e-money directive. It is therefore what Liechtenstein calls just a utility token, and that encompasses both what we think of as utility tokens and also stable coins, provided that they meet the criteria for not being e-money. So in the EU, it's straight, like the rules are straightforward, and do enough digging and understand how the token works, and you can pretty clearly, in fact, you can very clearly categorize things as utility tokens or financial instruments, and we don't list financial instruments. I think other jurisdictions, and one of the joys of being CEO of Bittrex Global is that I don't have to engage with the discussions in the US because we don't cover US clients. We don't allow any US customers onto our platform. But that you referenced XRP, Ripple, it must be incredibly frustrating to operate in an environment where you don't know what the proper classification of a token is, and it's incredibly important, right? Because if it is a security, the ramifications of that are significant. They're about as significant as they can be. And you're operating in this environment where you don't have the answers to that fundamental question. We need to get to the answers to that fundamental question, and really quickly, if people are going to have confidence in the sector as a whole.
Yeah, absolutely. Well, Oliver, the time has come for our quick fire round question. My bell is with me, who's going to keep us honest. So I'm going to ask you quick questions, and I want quick, short, 1 or 2 word answers. Are you ready?
I'm a lawyer. We don't do short answers, but I'll try my best for you.
This is not billed by the hour, so you better be quick. So, kicking it off, Oliver, what's your favorite thing about being a lawyer?
The people, the innovation, the cleverness of the people. It's a pleasure to work with them every day.
Favorite legal or law-related or law enforcement-related movie?
Obviously, Legally Blonde.
Who's the most influential or lawyer or legal person you believe in today or in history?
Joseph Raz is an absolute genius who the implications for him on legal philosophy are still being felt today.
What excites you the most on the future of crypto?
The possibility for democratization of finance.
Your favorite thing to do on weekends where you're not a CEO of a BG?
I don't understand. What's a weekend? I've not heard of those things.
It doesn't exist in crypto.
No, crypto never sleeps.
If you could say one thing to SBF, you could say one thing to SBF right now, what would it be?
Why'd you do it, man?
I know you're a big wine fan. What's your favorite bottle of wine or a vintage or type of wine?
Are you offering to buy one for me? I'm a Burgundy man. I absolutely love some of those Pinot Noirs coming out of Burgundy. Need to find a way to be able to afford some more of them, but we're working on it.
Bull market is hopefully coming soon.
Exactly.
So a lawyer friend of you tells you he wants to get into crypto. What's your best advice to enter the crypto industry as a lawyer or a legal role?
Read. Do everything you can. Understand the sector. The more you know, the more you can be effective as a lawyer. Like trying to figure your way through by yourself ain't going to work.
What is keeping you up at night as a CEO?
How best to serve our clients? That's a twee answer, isn't it? But, that really means that how do we take the most of this difficult time for the industry and really allow people to do what they want to do on the platform?
Exactly. Mr. Oliver Linch, the CEO of Bittrex Global, my last question. If you could have lunch or dinner with one person, who would that be?
I mean, you, obviously.
If it was not me, who else?
If it's not you, I guess it would be the President of the United States, just because how cool would that be?
Yeah, absolutely. Oliver, thank you very much for being on the show today. How can people find you or learn more about you?
You can follow me on Twitter as Oliver Linch. You can follow me on LinkedIn, or you can come and see us at any of our events where we're at lots of crypto conferences, or visit global.bittrex.com.
Oliver, thank you very much. And thank you everybody for listening to another episode of the podcast. Again, if you liked it, give us a 5-star rating. That would really help more people discover the show. Thank you very much, everybody. And really see you guys all next time for another episode of the Future of Money podcast. See you guys soon.